Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Long-term industry tailwinds can help provide shareholders with some security during periods of short-term volatility. And that's the case with today's income pick, Cool Company Ltd, traded on New York Stock Exchange under symbol CLCO, a pure play liquefied natural gas, or LNG for short, shipping company. John?
Yeah, thanks, Mo. Yeah, global demand in general for LNG is expected to rise by more than something like 50% by 2040 as industrial companies in China and the Far East switch from coal to gas to support their economic growth. And now the U.S. is the world's largest exporter of LNG, which means key growth markets in Asia and the Far East will result in customers paying more to have their production shipped further distances on a growing number of vessels, even more with canal closures and geopolitical tensions. Now, additional factors impacting the cost of chartering a vessel include everything from load demand to arbitrage, seasonality, and even spot rates, all of which bodes well for Cool Company Ltd.
Now, tell us a little bit about the company as well.
Cool Company, which is based in London, England, has a large fleet of 29 LNG carriers and floating storage regasification units that operate under short and long-term charters with major energy companies and utilities. Now, the average charter term is approximately 5 years, but it can be longer. In this recently closed second quarter, it secured actually a 14-year charter to service the fast-growing Indian LNG market for one of its two LNG carriers that should be delivered in the fourth quarter. And more broadly, some of its customers include other major oil companies, including Shell, BP, and Total Energy.
Let's talk numbers now. How did this company do in the second quarter of this year?
Well, for the second quarter ended June 30th, Cool Company reported revenue of $83.4 million. Now, that was down from $88.1 million in the first quarter of 2024, but the decrease was mainly a result of dry dock upgrades, which are a good thing. Net income was $26.5 million compared to $36.8 million in the first quarter of 2024. Now, the all-important time charter equivalent earnings actually increased to $78,400 per day, and that's compared to $77,200 per day in the first quarter of 2024. The increase was supported by contributions from two vessels that recently started to actually charge higher charter rates.
If you like what you see so far, check out incomeinvestors.com. There, we're offering a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. John, what can you tell us about this company's quarterly distributions?
Yeah, Cool Company only went public in March 2023 after being spun off of a Golar LNG Limited in early 2022. Now, as a result, it doesn't have a long history of providing investors with a growing dividend. It's only declared 7 dividends so far. That said, it has raised its dividend once, and that was in the first quarter of 2023 from 40 cents per share to 41 cents per share. Now, Cool Company has maintained that distribution since then. Now, this works out to an annual distribution of $1.64 per share for a current frothy yield of 13.6%. Now, that variable dividend payout is safe with a payout ratio of roughly 70%. And that's well below the 90% threshold we're willing to stomach here at incomeinvestors.com. Provides the company with enough cash to continue to pay its dividend, and if CE, TCE, or time charter earnings continue to increase, management could increase its quarterly dividend too over the coming quarters.
John, thank you so much for your insights. Just to recap, Cool Company Ltd is a pure play LNG shipping company that had a fleet utilization of 99% in the second quarter of this year compared to 95% in the first quarter of 2024. It reported a solid second quarter results with TCE improving to $78,400, inked a 14-year charter, and has a firm backlog of $1.8 billion. It also has an attractive dividend yield. Thanks to a shift in bias towards U.S. LNG production, the outlook for Cool Company Ltd remains robust. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.